Okay, now we're going to discuss building the model. What I'll do is I'll discuss revenue down here. You see this tab. Revenue is the most important thing you can build for a model, because when you forecast the future in all financial models, almost every single line item is a percent of revenue. And so modeling is really easy once you're done with revenue. So spend most of your time focused on revenue. And then what we'll do is I'll discuss the income statement, how I built it, then the balance sheet, and then the cash flow statement. And we're going to ignore these for now. Those are valuation metrics. Let's go through the model first. Okay, so let's kick it off with the revenue tab here. And as you can see, the revenue tab all feeds into the income statement. Okay, so that the top line on the income statement here, right? That's why they call it the top line. It's the top line, revenue. This is actually from this statement here. Okay, so we all know there's 3 different revenue line items for LinkedIn. Remember, we did the total addressable market analysis. Okay, so what we're going to do is we're going to look at how to get all the data in here. And it's actually pretty simple because it's all available on that downloadable document we got directly from LinkedIn's website, or you could hard code it, which means type it in manually from all of the previous press releases and 10K and 10Q filings from SEC.gov, but that will take a lot of time. So we put in all of our data, right? And again, anything blue is something we hard coded in, meaning it's not a formula. That is a formula. That is not. Let me just go up here and let you see the formula bar. Okay, good. Great. Yeah, so see here, this is hard coded. This is not. That's actually a formula up there, yeah? Okay. All right, so total revenue is quite simply the addition of these 3 revenue line items, right? LinkedIn has 3 major revenue line items. And we have to enter in all this historical information and then forecast it. Next session, I'll talk to you about forecasting, not this one. Okay, so let's take a look at what or how we built Talent Solutions, right? And this is basically, remember, human resource departments using this product. And so I try to make it as simple as possible, and we can drill down and add additional complexity. And again, keep it simple and build on top of it. Otherwise, it gets a little bit overwhelming for us. And you can always add lots of comments here, right? Especially if you work in big teams. Add a lot of comments just so you can remember why you entered certain data. Okay. And all this information is available from LinkedIn. Okay. We've got the total new customers in the quarter or the financial year. This is a quarter, that's a year. Okay. We got the average number of customers, the year-over-year change, revenue per customer, that sort of thing. And you'll see right here, this is a new line item where there's not that much data. And this is because LinkedIn actually purchased a company called lynda.com, and it's part of the Talent Solutions line item. And so we really want to document this here because we want to figure what the real growth rate going forward is for LinkedIn, meaning the organic growth rate, not growth they purchased. Okay. So we have all these line items here. And again, this is hard coded directly from LinkedIn. Okay. So we have all this material. Remember, they gave us the geographic information as well, which we got at the bottom of the press release, which we saw in a previous section. Okay, great. So this is one line item, and let's just close that out here. And now let's look at marketing solutions. Okay. And we'll click on this plus for more details. And you can get a heck of a lot more details here on marketing solutions, which is awesome. You get from the company in their quarterly earnings press releases, the number of unique visitors that they get. That's 100 million here. The mobile unique visitors. Mobile is the new desktop. It's very important. Then you get member page views, and this is in the billions. Wow, that's a lot of page views. And then sponsored updates as a percent of marketing, that sort of thing. And they provide, again, all this information. I know it seems like a lot, and sometimes I'll just enter in all this information and I won't know how to use it today, but in a future quarter or year, I'll look back and analyze the data and build on it. and build on it. Okay, so that's marketing solutions. Let me scroll back to the top here. And the last line item here is premium solutions. And this is the one where you pay the monthly fee of $29 or more, actually. And that gets you a number of InMails. And you can pay more than $29 per month if you want more than a couple of InMails. Okay, so this is hard-coded, which is why it's blue. And we always track a couple things, the year-over-year change and the percentage of revenue. So when you and I go to LinkedIn and we pay for the premium subscription so we can send InMails, that's actually a small percent of the business. In fact, in calendar 2015, that was only 17.8% of revenue. The big revenue driver is the HR department product here, Talent Solutions, which most of us don't know about because we're not all in HR. Okay, let's click plus here to see how we built out premium solutions, or at least to get more detail on it, right? Wow, there's a lot of information here, right? So basically, this gives you a breakdown of all the product, all the information that goes directly into the premium subscription revenue line, okay? And I know it seems like a lot, but we build on it slowly so that we understand it slowly over time. And again, this is from the bottom of the press release. Remember, they gave the additional information, which is geographic breakdown. And I'm not using this data, but heck, I entered all of it in anyway, so I can analyze that. If one day, if there's a problem of growth slowing materially in one area, is it because the U.S. is slow or international or whatever, that sort of thing. So let me close that out. Okay. So there you have it. Those are the 3 revenue line items, and we can go into a lot more detail on how to build those out as well. And so down here, I wrote click plus, that's a plus, for more data from the earnings press release. So this is additional stuff. I didn't know where to put this. I didn't know if I should make this a part of the previous 3 revenue line items or separate. And so we've got, remember, revenue by field sales and online sales. And this basically means a quota-carrying sales rep that works at LinkedIn. And this is somebody that does just online sales, like telesales versus in-person meetings. And it looks like field sales is a lot bigger than online sales. Okay. And then we've got revenue by geography for all of revenue, not just the 3 revenue line items we saw above, right? And we can go through this information. Looks like revenue from the United States growth is 36% year over year for Q4 of last calendar year. EMEA, which is Europe, Middle East, is 34%. And then APAC, which is Asia and other regions, is 29%. And you could also look at quarterly change. And remember, business is seasonal usually, so different quarters usually make more revenue than others. And then we've got headcount here as well. And we just hard code that in. Again, that's blue, so it's hard coded. And we can look at year over year. Is LinkedIn hiring too much or too little? Whatever, that sort of thing. And wow, look at that. Looks like they hired 40% more people. Wow, that company's growing fast. Huh. And we can actually look at revenue growth year over year, and we could see, does that make sense to us? Wow, revenue growth is 34% year over year, but headcount growth was 40%. That seems kind of odd or misaligned, or maybe not. Who knows? But anyway, that's just something to keep an eye on. And you can see headcount by division too. This is awesome. I love it when a company gives a lot of information, a lot of disclosure. Sales and marketing, we have, wow. Okay, so 38% increase in sales and marketing folks. It looks like they're increasing the headcount for product development a little bit less, that sort of thing. And so you can see that there's just a wealth of information provided by LinkedIn for investors here, which is fantastic. Transparency builds trust. We're not going to use all of it, but we have a bunch of it in our model in case we want to use it in the future. Okay, good. So we just looked at the revenue tab, right? And you want to spend a lot of time again on revenue, more time than on any other portion of the financial statement, because revenue, basically every other line item becomes a percentage of revenue, which I'll show you here in the income statement. Okay, let's move on to income statement now. All right, so the income statement is pretty straightforward. And again, we get all this information on a quarterly basis from the company when they issue their quarterly numbers. And you can see here are quarterly numbers. Now, I'm adding a little bit more complexity for you here. Okay, so green means it came from another tab. You see that? And that's a best practice when you model. Blue is hard-coded, meaning there's no formulas here, but there is formulas for everything else. See? Green is from another tab. This is from the revenue tab right here. Okay, great. So from the earnings press release, we hard-coded in the cost of goods sold. We put in sales and marketing, product development, G&A, that's general administrative, and depreciation, right? We hard-coded all that information. And then this is just an addition of all the expenses, okay? And here we go. This is income minus all those expenses. It's negative here, and we haven't even gotten to interest and taxes yet. And so what I like to do, though, is here's EBITDA, okay? That's earnings before interest, taxes, depreciation, and amortization. And this is what's called adjusted EBITDA. And remember before I said there was GAAP and non-GAAP? Well, I love to look at non-GAAP as a financial analyst. Accountants love to look at GAAP. And this is called adjusted EBITDA. And it's adjusted because it subtracts stuff that's non-cash. Like when we depreciate a building, right? That's not a cash expense, right? It's just an accounting entry. And there's many reasons why that exists. And it's good because that means you pay less taxes because you have higher expenses. But I want to get rid of that because it's a non-cash expense for now. And if you have any additional questions on this, just send me a message directly or include it in the Q&A portion of this course. Thanks. Okay, so we have adjusted EBITDA, which is important, and I'll show you why in a minute or so. And then we've got other income, and then we've got our loss and provision for income tax, because right here. And then what happens is you get down to your earnings per share. And the non-GAAP earnings per share is what I care about. And it looks like they made 94 cents last quarter. That's the fourth quarter of 2015. But on a GAAP basis, meaning if we include all the stuff like depreciation and amortization and the non-cash stuff, they lost money. I like this line better because it includes, basically mainly the non-cash items and the items that, quite frankly, I can model that are repeatable longer term. So if there is a one-off event, like a big litigation expense one quarter, that's not going to be ongoing. That's going to be in GAAP, but not non-GAAP, because non-GAAP is just stuff that's ongoing, and it's always easier to analyze that. And so there you go. This is the income statement. And so earnings per share is here, and revenue is right at the top, and we talked about the expenses in between. Now, it's really important to monitor the year-over-year growth for every line item, as well as the percentage of revenue. And I'll explain why next section when we do the forecasting in the future. We need to look at historical trends. See here, trend? This is a trend as well, so we can predict the future, okay? So we're done with the income statement for now. And again, under here is where we forecast stuff, which we'll do next section. So let's take a quick peek here at the balance sheet. And similar to the income statement, we have all the quarterly numbers here, and blue means hard-coded, right? And we've got the assets, liabilities, and total liabilities plus shareholders' equity. And we know that the shareholders' equity plus liabilities has to equal assets, right? And that's our sanity check to see if we are right here, right? So make sure that this dude here, that's total assets, is equal to liabilities plus equity, which it is here. Great. Sorry about that. I keep doing that. Okay, cool. And lastly, let's look at the cash flow statement. And like I said before, the cash flow statement will be able to tell you where the income statement is misleading you, because not everything is a cash item. And so the cash flow statement starts with you take the GAAP, not the non-GAAP, the GAAP net income, and then you add back all the stuff that's non-cash, right? Depreciation is not cash. Like, we didn't have to give money to anybody and we depreciate it. Stock-based compensation, when we give equity to employees, we're not giving them cash. We're just kind of creating more shares. And then other stuff here that's non-cash, and that gives you adjusted net income, okay? And then what happens eventually is you add back some of the changes in working capital from the balance sheet, right? And so if you have a big increase or decrease in accounts receivable, that can increase cash or decrease cash. And so there we go. We've got net cash from operating activities. And then here, it looks like we purchased a bunch of equipment. And so we have to deduct that. And that's called net cash from investing. And then financing as well. If we got a loan or whatnot, we could make that change here. And then what happens is you get the net increase or decrease in cash by adding those three line items together. Net cash from operating activities, investing, and financing activities. And then you got the cash at the beginning of the year and then cash at the end of the year. And this is going to be the cash from last quarter, for the balance sheet, and this quarter from the balance sheet. This is from the beginning of the year on the balance sheet and the end of the year. Okay. And then we calculate free cash flow. And free cash flow is just cash from operating activities, right? And then you're going to deduct the CapEx. So it's basically cash flow from operating activities minus CapEx is free cash flow. And we're taking note of these line items here, free cash flow, because that's going to feed later into our valuation, which I'll discuss later on. Okay, so that about does it for the financials and how we create it. Again, you get all this information directly from the company's website, LinkedIn's website, or whatever company you're analyzing. Or you can go to sec.gov and go to the 10K and 10Q and manually hard code all of that information.